We're going to talk about today is inflation and the Fed, like we do every other day. But we had some new news come out today, and I'm pretty excited about that. Why? Well, I nailed that one too. I said the inflation numbers that are probably going to come out, well, it's today, and I said this yesterday, is going to be even better than what was expected. So let me go over just what CNBC has to say about this, and then we're going to go over the headlines. But just out right now is this, and this is why I subscribe to this system. You don't have to watch me every day. You'll get updated on this. But let's go through here. Here's one of the headlines, brand new, posted on what's going on with the markets. Don't know if you can hear this.
Consumer price index July read unchanged, double goose eggs, 0. And last month, of course, up 1.3. That's the highest level since 2005. If we look at ex-food and energy, up 0.3, also less than the half of 1% anticipated, and less than half for the rearview mirror, which was up 0.7. The high water mark here, folks, goes all the way back to April of 2021 when it was up 0.9%. Now, the year-over-year numbers, year-over-year headline, up 8.5. This is the one I was a bit nervous about. In the rearview mirror, it was up 9.1. That was the highest since 19.
Hopefully you can hear this.
8.5 brings us back to levels we haven't seen since just April of this year. And finally, ex-food and energy on the year-over-year outlook, up 5.9, expected to be up 6.1. It equals our last look, which was up 5.9. High water mark here was in March, where it was up 6.5, the highest since 1982. And if we look at what's going on with interest rates, they are falling. And for a change, we have a bull steepening going on. Bull steepening, meaning prices are rising, and that's pushing short rates down almost twice as fast as long rates, but all rates are going down. We're down almost 16 basis points in a 2-year. We're down about 10 basis points in a 10-year. And it underscores the Fed, by its very nature of ill forecasting success, is reactionary. The market's not, and the market continues to do what it's now done for weeks and weeks, and that is long rates are moving down. It believes that transient ultimately will be the correct word. The problem was the time frame. Melissa Lee, back to you.
Transient, it's coming back. And everybody thought I was nuts about 6 months ago or whatever. I said, guys, just wait. You're going to start seeing these numbers start to move, especially when we start seeing oil. The biggest pain that we all see, pain at the pump. We start seeing oil coming down. We're going to go over that here in a second. So, guys, this is your morning report. I want to just give you guys what's coming out. So today, the biggest number that was out is the CPI. It's this Consumer Price Index. How much is the numbers going up for us, paying at food and the pump and everything else? Well, we've seen it coming down more than expected. So let's get over to the news. The headline news we have right now is NASDAQ jumping. NASDAQ loves it. Stock markets love it. Everything is loving it right now. This can turn in a dime, but let's take the good news when it comes. You can see the Dow Jones is up 400 points. NASDAQ is up. Why investors cheer lighter than expected inflation report. The next piece of this puzzle is, I hate when this thing does this, is CPI inflation rate is finally falling much more than anticipated. Okay, that's what we've been talking about. So how does the markets like this? Well, let's get out of this. What we follow here on the channel, folks, is what I try to give you guys is what's going on with real estate. So ignore those other channels that's basically just telling the world's ending. Let's give you the facts. Let's give you the news. That's why I post things from CNBC, from Fox, everything else. We consolidate that into your factual news. So I'm going to start calling this the facts behind the news, and let's dig into it. So if you have any comments, post them down below. I don't use this my morning update to answer questions. I do that on Tuesdays, but it's good news for the markets right now. We're starting to see inflation really taking a turn. So what we follow here is basically right in this section right over here. This is the MBS market. This is a bond that trades on Wall Street that gives us the direction to mortgage rates. Okay, in its simplest form, there's an inverse relationship. You see this number going up like you do right here in this chart. It means rates are coming down. What it's telling us is the price of the bond, in this case is a mortgage bond, is going up driving down the yields. So what's that doing for us? Well, the headline news that one I want to go over with you guys is right here. It's the inflation numbers. You see it, the core CPI. The CPI is consumer price index, how much pain we're feeling as a consumer everywhere between buying stuff and energy and everything else. We saw it cooling off quite a bit. Let's go through the big numbers. It's right down here, the CPI year over year number. Last reading of last month was 9.1%, the highest in decades. Okay, the analysts came in and said they expected to be 8.7. And I'm like, I expect it to be even more than that because oil prices are down 30%. But I think our next reading for next month, if things still continue to cool like they're doing, and I'm going to show you the oil charts here in a minute, is we might even see this number come down further and further and further. So why is this important? Well, the Federal Reserve is monitoring this and they're jacking up rates to cool down the markets. Well, the markets are starting to cool. Okay, so that's what we see right here. You can see that numbers coming in. Look at the month over month number that we're seeing right here. It was nothing, zero. Okay, they expected a 1.3% increase month over month. The trend or the analysts, or wait, I'm sorry, that was last month's reading. The trend or the analysts were expecting 0.2. It came in at zero. So the inflation numbers are really coming down in line. So let's put some of this in the context. Okay, if the Fed kind of pulls their foot off the pedal and the markets start to relieve themselves, are we going to see maybe mortgage rates come down even further? I'm predicting today we're probably going to see about an eighth. And if the market rallies, it continues to rally, we might even see mortgage rates come down 0.25%. So if you haven't locked in with us, please call me. Okay, all our information is down below. Why we can probably help you get a lower rate and much lower fees. So that being said, let's get over to where oil prices are right now. Let's look at oil prices. Yesterday, I think we came in and oil was about $91, $92, $93 a barrel. It's down to $88 a barrel, another 2.3% drop in oil prices. Okay, so you're going to continue to see the pain at the pump reducing. You know, in Chicago, about 2-3 weeks ago, gas was $6. It's $4.44 now. Okay, huge drop in that section of the markets. Let's get a full read on the markets right now. Dow Jones is up 480. NASDAQ is up to 248. The markets are loving it. Mortgage rates are coming down and everything else. So let's see where mortgage rates are. So here's where mortgage rates ended yesterday. They were basically flat. I'm expecting the rates as they get published today to start coming down, easing. Why? It's because all the information that we just went over. Okay, so we have right here the top 6 products, most used mortgage products, and here's the rates. So what these rates are, these aren't my rates. These aren't any individual mortgage company's rates. These are what Mortgage News Daily, they survey mortgage lenders all over the country and said, with a survey and saying, if you had a client with a 740 credit score buying a $500,000 home, 20% down, it's going to be a single family home that they live in, what would your rate be? And here's the rates. Okay, you can see basically across the board, nothing happened. All right, so let's go back based on this information to the MBS market. I'll show it to you live. We are up 45. So meaning when the mortgage rates get posted here, probably within the next half hour, 45 minutes, we're probably going to see about an eighth of reduction in rates from where they were yesterday. That doesn't mean they're much better than last week or the week before or whatever. So if we locked you in already, you're in good shape. If we can find you much better rates, we'll be reaching out to you immediately. But if you're out there and you've already locked in with somebody and you're thinking, man, I'm stuck, you're not stuck. Okay, here's how this all works. And I'm doing this because, the mortgage rates have dropped about 1 full percent. And let's go over to that. Let me focus in on that to show you guys that I'm not just full of hot air. So mortgage rates right now, let's get it. I'll put this back on the screen. Let's see the 52-week high and low. Let's see where they were and where we're coming off of those highs. So let's just go to the 30-year fix. It's right here. You got the 52-week high and lows down here. The 52-week low is 2.91. The 52-week high just happened about 30 to 45 days ago. It's 6.28, so 6.25. We're at 5.35 right now, almost 1 full basis point, one full percent lower than where we were just weeks ago. So if you're out there and you locked in, you're not stuck. Okay. What I need you to do is the number, you have the number, phone number down below. Give us a call. We'd love to analyze what you have to see if there's a better rate out there for you. That's the whole context of this. Okay. And you can go across the board and all this other stuff. So that's my morning report. I'm not here to answer any questions. I'm just giving you guys quick, fast information to let you know what the market's going to do and basically why it's doing what it's doing. We're having the inflation numbers coming in, and the markets are starting to cool off. One of the biggest pieces of this puzzle is oil. Now, let's just assume for a second, when Russia-Ukraine situation eases, now we have that pent-up oil that's sitting there going to hit the markets as well. So are we going to have an oil glut that's actually going to make things even, the inflation numbers even better and better and better as we progress through all this stuff? Probably, but only time's going to tell. So what I try to do every day, guys, let me pull me back up on the screen, is I want to inform you guys the facts. I want to go over the news, what's out there, but I want to make it pertaining real estate, why you're here. But I'll make it also entertaining and give you the guys the facts, what the direction the stock market is, what commodities are, energy pricing, but we focus here on real estate. So if you have any questions, please list them down below. I'd love to answer anything that you have. I don't do this live, but I do lives on Tuesdays to answer any and all the questions that you guys have. So good direction for mortgage rates today. Why? Well, the CPI number, consumer price index, came in much better than expected, much cooler than the numbers that we were otherwise thinking. So if you're more in need of a mortgage, residential mortgage, I don't care if you're buying, selling, refinancing, you're building a house, those start cooling down. We're getting about 10 applications a day for people building homes, and you're probably freaking out. So what's my projection of where mortgage rates are going to be in the next week or two? I'm starting to see them actually driving down. There's no catalyst really that should cause mortgage rates to spike. There's really nothing out there. But in today's world, you don't know, because on the snap of a finger, you can see the markets turn fast. As you're seeing today, we had some good inflation numbers coming out. I think a lot of the things the Fed's doing is helping. But a lot of the stuff in the background of things that I've been talking about for a year is starting to subside. And a lot of people are getting forced back to work. We see that with the labor numbers. Consumer discretionary income is starting to plummet. Consumer savings accounts are starting to deplete. And things are starting to get a little bit back to normal, or as normal as they can be. So that's my report for today. My name is Dan Frio. I'm a mortgage broker. I'd love to help you if you're anywhere in the country. We are federally chartered. You can find all my information down below, how to reach us, how to email us, how to call us, how to even schedule a meeting. So God bless, guys. Thanks for watching. I'll see you tomorrow. Bye-bye.